So when we're talking about retail traders, exactly what we're talking about. We're not talking about everybody. You can't sample everybody. What group are you looking at?
We're specifically looking at those traders that go home and perhaps trade through their taxable brokerage accounts. So in a way, it's the purest form of animal spirits within the retail investor community. We're not looking at ultra high net worth investors trading through their investment advisor, nor, for example, a portfolio manager at an institution that goes home and puts on trades for his family. We're looking at, for example, Chris, 25 years old from Ohio, that trades on his phone during lunch break on Robinhood. We think those are the ones that underpin the market.
You're talking about the people that watch Worldwide Exchange and hear our picks, and then they go on their Fidelity account or Schwab account and they do it.
Exactly.
Okay. Good to know. Good to know. I want to talk to you about one of the hottest trades in the markets right now, that quantum computing trade. We just talked about it. Big swing. So we saw declines after Jensen Huang said it's like 10, 15 years away, and then the SAP CEO, Christian Klein, was kind of bullish on it. Microsoft was kind of bullish on it. Absolutely. What's going on in the quantum space?
Yeah, what we think is happening here is that retail investors, again, have shifted within the broader AI theme onto the newest trend, which has been quantum computing after those news. And some of these stocks usually have smaller free float. They have high short interest ratios, and we're seeing signs of what's a typical type of retail-driven squeeze, which lately also gets accompanied by institutional investor flows. Now, what happens also is that we're seeing some of these flows, or some of the patterns that we're seeing in this theme reflect also similar patterns that we've seen in early-stage thematic bubbles driven by retail investors. And we'll have to see whether at the end of this quarter or the end of this February, March, when these companies start reporting earnings, whether those earnings expectations match what the street is expecting, and then you get a bid from institutional investors, which usually extends the life of a theme.
For the people listening right now, we're showing a graphic right now, the anatomy of a bubble, showing where the retail traders, they buy the dips, they buy into weakness, what we call a dead cat bounce. And now you can't see it. A really interesting chart right here. I want to talk to you about some other part of this trade, that short sellers, they actually benefited from this. So who are the short sellers? Who are the people shorting it? And how do they relate to these retail traders? You were kind of mentioning, I think, alluding to at least, that Reddit rebellion a few years ago when you talked about the short sellers squeezing the retail traders. So what's going on here with that?
Yeah, absolutely. There's always, in the market, there's always going to be a cohort, usually institutional investors and the more tactical investors that will tend to benefit and profit from companies, or based on fundamental views, will tend to take the other side of the long. And a lot of times what happens is that when you have thematic and small cap stocks, those tend to see usually a heavier flow of short sellers from the institutional side because of either fundamentals don't look right and so forth. But in a case like this, this is part of a broader theme, which is the AI semiconductor theme that retail investors absolutely love. And as probably you and I also look for the next potential big winner, which has been NVIDIA for retail investors over the past couple of years, they're moving down the risk curve, and they've landed on quantum computed stocks. So it's a bit of a battle right now, with retail investors having had the better of it over the last few months. But from now onward, that's really where the litmus test comes through with earnings, and then the battle of expectations between retail and institutional investors.
All right, so a really interesting dynamic between those two different sides.
Absolutely.
You also put out a report at the end of the year that retail traders, they outperformed the market. 41% gain in 2024.
Absolutely.
How did they do it? I'm sure a lot of people who are professional money managers are like, wait, what were they doing?
Yes, no, absolutely. Again, we're looking at the very aggressive, more speculative side of retail investors, the sort of the cohort that, as I said, goes home and trades on Robinhood or puts on the more aggressive trades. And what we see is that there's a 60 to 70% exposure to growth stocks, consumer tech and tech stocks. And Tesla and NVIDIA have been two key stalwarts of their portfolios. And as you know, in the fourth quarter of last year, Tesla went on a massive run, and NVIDIA has been on a two-year tear pretty much. So that big exposure has definitely helped them outperform the S&P last year and in 2023. And for the first time since the start of our data, last year they also outperformed the NASDAQ. And it's because of that heavy exposure to NVIDIA, Tesla, and some of these also levered ETFs that have really helped performance last year.
We got to go, but I want to ask you, do you see the potential for that to happen again this year? Because that's a pretty interesting stat, 41% gain for the year, outperforming the S&P, outperforming, I'm sure, a lot of professional money managers.
Yes. It could be, depends on the market as well, depends if tech continues to be the leader in the market in 2024. We do think retail investors will continue to buy in this space and will perhaps go a bit more aggressive this year. So depending on how the overall market does, so will the retail investor.